What a day, guys. Today I absolutely crushed the markets. Whoa, very nice. I traded for about 60 minutes. I was about to finish my trading day right here. However, I knew a good setup was about to come, and I absolutely crushed the markets with this trade down here. Guys, take a look at this. I almost caught the exact bottom with this trade right here. This was a picture perfect trade, and I want to tell you exactly how I found this trade, how I knew that this will be the picture perfect entry, because this was as obvious as it gets. All right, trading sometimes can be very obvious. Now, I'm not going to go into all the details about this scalping strategy because, as you can see, I was trading quite a bit today. Had a couple losses. I think one bigger loss right here. Had a couple of break-even trades. But overall, pretty nice day. It was picture perfect. Guys, trading can be effortless. It can be simple. It's not easy because you do need to follow the rules. You do need to follow the strategy and need to understand why the market does what it does. But once you do, it can become simple. It's not easy, but simple. All right. And I want to tell you exactly how I found this picture perfect trade right here, because this was as beautiful as it gets. I did almost the exact same trade right here a couple minutes prior. However, this was way more predictable. This was an A+ setup, and I want to walk you through this A+ setup right now, so you can potentially do the same. All right. So for this trade, we use Bookmap. What is Bookmap? You can see right here. It's just another way of looking at the markets. We can see liquidity. Liquidity is basically just where people are willing to trade. So at this level, for example, we can see that we had 128 bids in the market, meaning 128 contracts are supposed to be bought at that level. So for example, a big bank, a hedge fund, whoever it is, doesn't really matter. Most likely it's one big market participant says, here at this price, I want to buy 128 contracts. Okay, here at this price, meaning above the current price, someone wants to sell 172 contracts. That's why this color is a bit darker than this one right here, because here we have more contracts on the ask than on the bid. It's always just a matter of comparison. But what's really important is this right here, this bid right here. We had 168, 201 contracts at this level, on this level, an absolute huge level. And this liquidity was in the market for a very long time, right? You can see this is a real liquidity. It moved from here to here to here. This was a real level of liquidity, and something happened at that level that we will now take a look at, because this right here was as obvious as it gets, guys, as obvious as it gets. And once you understand this logic, you can trade with this exact setup as well. So the basic understanding is, instead of looking at charts, so instead of looking at this, where I cannot really see anything, right? I cannot see who's aggressive and who's passive. Is aggressive selling coming in, or is aggressive buying coming in? Where's liquidity? Where's the market most likely gonna go to next? I don't see any of that. All I see is green and red, right? But it doesn't tell me anything, okay? I cannot read the market correctly just based off of charts. The only thing that I can read here is the volume profile, meaning I see that in the beginning of the day, right? This was pre-market open off this here. We're trading back and forth here in this range. And then obviously, once the market opened up, we traded quite a bit down here. That means lower prices are being accepted. Okay. So basically, I have a clear advantage going short, either trading a breakout here or a reversal up here. However, what happened that I went counter trend and actually traded a reversal down here at this exact low? What happened? What happened? And guys, the cool thing is, using prop trading firms, you are able to place this trade in one account, and it gets copied across multiple trading accounts. So for example, if you want to do a quick math, if you want to do just 10 grand a month, $10,000 per month trading, that's all you want to do. What do you have to do? Well, you make $100 in profit across 5 of these accounts. And just in this one account now, just in this one account that you see right here, you don't see all the other accounts in the back end. I did about $300 and something dollars, $302 in profit in one account. Proper risk management. Don't get blinded. Don't get fooled by these people showing you multiple thousands of dollars in one trading account because they don't have proper risk management. They don't. What I like to do is decrease my risk, make more money spread across multiple accounts. So even if I only do $100, $50 in profit per account, because I multiply that money across multiple accounts, I make so much money trading. This is better than any freaking business out there. I don't have to deal with any employees. All I have to do is make the right decisions. Read the market, buy and sell, buy and sell. No clients, no employees, no nothing. Okay? So now let's get right into it. So you've already seen Bookmap. Liquidity. This is aggressive selling. The big red bubbles is aggressive selling. Big green bubbles is aggressive buying. Okay? That's what you need to understand. You also need to understand auction quality and auction speed. What is auction quality? Auction quality means how does the market get to one level? Meaning, is the market going back and forth, back and forth, back and forth, buying and selling, buying and selling, buying and selling to a certain level? Or is it just straight down to a certain level, only selling coming in? Well, let's take a look. For example, here, we see pretty good auction quality, buying and selling, buying and selling, buying and selling. And then suddenly we see this shift downwards to a level of liquidity where the market likes to go to, but also reverses from these levels with extremely bad auction quality. We don't see any back and forth here, right? We only see selling, and we have these huge wicks here where there was basically no trading going on. The market just went straight through these levels to this level of liquidity. Okay, what does it mean? This right here is an abnormality to the market, and the market doesn't like abnormalities. The market likes back and forth, back and forth, back and forth. Good auction quality. But if we see this bad auction quality, huge selling coming in, yet the market doesn't go further down, what does this tell us? Well, it basically tells us, most likely, just the logic behind it, a big market participant, most likely, sold a bunch of contracts here, a bunch of contracts to get the market to go down to this level. They then bought all of these contracts that were being offered here on this bid, They bought up all of these contracts right here. Like they exited their position. So they went in short, most likely here at the 49.50s. They exited their position here at the 47.50s. 8 ticks, quick move. But with a lot of contracts, that can be multiple thousands of dollars in profit already. Multiple thousands of dollars, like a lot of money. Okay. And then they went in long here. Okay, why did they do that? Because right here at this level of liquidity, they can build up a huge position. And that's exactly what we like to see. Now, the cool thing is, once we understand this, meaning we are going to a level of liquidity here with bad auction quality in the S&P 500, this is the ES right now, then we take a look at what is happening in the correlating market, the NASDAQ. And you can see, right here, I had this picture perfect trade. Why? Guys, why? Simple. I knew if the leading market, which is the ES, the S&P 500, goes to a level of liquidity with bad auction quality, we see an absorption here, which is basically a big market participant, a bank, a hedge fund, it doesn't matter, building up a position here very quickly. If we see this, then I know a breakout to the downside is not very likely. This is not how a breakout looks like. It's not. And if I do see the same thing in the NASDAQ, which is the correlating market, this market leads, this market follows. If I do see the exact same thing, I want to get in. Because the chances of this breaking out to the downside, is very slim. And all I need, guys, is a tiny pullback, a tiny move, because I can make thousands of dollars in profit from in and out. This trade here 25.20 I went in, and I went out at 25.56. 30 seconds, guys. In and out. In and out. Quick scalps. Basically, the market didn't even go against me. I caught the perfect entry because I knew if the market goes to a level of interest like this, it is extremely unlikely that the market will keep pushing down. So unlikely. And that's how you capitalize on this information. If you see this, a correlating market, the markets are doing the same thing. Both are going to a level of interest here and here. Both are going to these levels or to that level with bad auction quality. Bad auction quality. You can combine all of these things. It's like pieces to the puzzle. You piece them all together. 1, 2, 3. And I always wait for 3 confirmations. Now, in this case, what were my 3 confirmations? Well, first, level of liquidity. Second, very important, correlating markets doing the exact same thing. Third, extremely bad auction quality. Extremely bad auction quality right here. It started here all the way down right here. And then I could have even added a fourth confirmation, which was the volume profile. What do I see? Well, I see that down here we have no real interest in trading. The volume profile basically tells you where is the market interested in trading. What is a fair price, high volume nodes, and what are unfair prices, unaccepted prices, up here and down here, low volume nodes. And you always want to try to get a reversal trade, if possible, in these low volume areas, because price can just push back into this high volume area very easy. So if we see all of these things combined, 4 confirmations that this trade will work out, it's so freaking easy to make money trading. Not easy, but simple, okay? And then we obviously did the exact same thing down here. Let's take a look. What happened? What just happened about 10 minutes ago? Because these setups, guys, they happen all day long. All freaking day long. It doesn't matter. What do we see? Guys, it was probably this exact situation right here, I would assume. It was this exact situation. So let's take a look. 1041. 1041 in the ES as well, right here. Guys, this is so... If you know how this works, making money trading can be very straightforward. And it doesn't have to be difficult. It really doesn't. It really doesn't. So what do we see? And how could we have profited from this move down here all the way up here? Very easy. Well, let's take a look. What do we see in the leading market? Well, I can see that right here, the ES is selling off quite aggressively, right? Lots of selling coming in, sure. Okay, great. And what else do I see? I see liquidity here, I see liquidity here, and I see liquidity here. This is quite far away, so I'm not too worried about that. However, once we are here, and once I see 1 level of liquidity, 2 levels of liquidity, and 3 levels of liquidity, this has been in the market for about 30-45 minutes roughly, then I know, great, this is the level that I need to take a look at. And what happens, guys? Exact same game, exact same scenario. The market went to this level of liquidity right here, boop, 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 with extremely bad auction quality. Where are we in terms of the volume profile? At a low volume area. So the market likes to reject from these levels quite easily. So we go there, bad auction quality. And what do we see in the correlating market? Surprise. Bad auction quality, going to 1 heavy level of liquidity right here. This level of liquidity came in and we swept all of this liquidity, meaning a big market participant just bought. This looks like aggressive selling, right? No, it's not. It's passive buying. What is the difference? Well, aggressive selling means that the market will most likely go down, right? However, even though we had lots of selling coming in, big red bubbles, the market didn't go down any further. It's because everything that was offered, sold, to 1 or multiple big player was being bought up. by that player. So all of these contracts here, all of these contracts were bought up by one market participant. He said, thanks for offering me all of these contracts. I'm going to buy everything you're going to offer me until the market shoots up again. So we combine, this is the exact same setup. Bad auction quality, 2 levels of liquidity at a low volume area. The market, the correlating market is doing the exact same, even better. We sweep all of this liquidity and then we get in. We get in. All right. Exact same setup. Where do we get out? Very important. There's 2 things you can do. Either you get out at previous levels of liquidity. So if you take a look, where is the previous level of liquidity? The one that just stands out the most. Well, this one right here. This level right here. Why? Because this is where the move started. Same here. This is where the move started. So I will get out either here or somewhere here. The cool thing is the Nasdaq is now very obvious because we see an absorption here. So the exact same thing, just the other way around, happened up here. Someone, a big market participant, just said, thanks for offering me all these contracts. I want to go short here. I want to go short here. So he sold, he shorted all of the contracts that were being bought here, basically. He shorted everything. And now the market is going down. And where are we now? Where are we now? We are here at this pretty much low volume area once more. And how do we get to this level right here? Look at the difference. This here is bad auction quality. This here, this auction quality is way better, way better. Why? It's a lot slower, some buying and a lot more selling coming in. This right here is just boop, one move down, bad auction quality. However, this here is back and forth, back and forth, back and forth. Way, way better auction quality, way, way better. So what is most likely going to happen? Well, we might potentially break out of this level at some point right here. We might. Maybe not yet, because right now the market is slow. You see, no transaction basically. The market is just standing still. For a breakout, you want to see fast action, fast price movements. We don't have that right now. So is a breakout likely to occur right now? No, not yet, because the market is not fast enough yet. Very, very important. These right here are all just pieces to the puzzle. Pieces to the puzzle. And if you want to learn how this works, if you are an entrepreneur, you have a business right now, your business is going well, but you do have about 15 to 30 minutes every single day. And I know you have it because you're probably scrolling on Instagram, watching some reels or watching some YouTube videos right now. Guys, this video has been 20 minutes I've recorded for about 20 minutes now. So if you have 20 minutes watching my YouTube videos, then you have 20 minutes trading the markets. You have enough time. If you want to make some serious money trading, so that you don't have to pull out a salary from your business anymore. Instead, you can hire someone to replace you in your business. Instead, you make your money trading. You get wealthy building your business that is not depending on you anymore. And you get rich along the way trading. You keep all your money in your business. You keep it all in your business. However, you still need some money to live off of, right? Well, you do that with trading. What do we see right now? What do we see right now in the markets right now? The Nasdaq is not correlating right now with the ES. Interesting. Good auction quality, buying and selling. Market is going back and forth in very small movements. Sure, the market is still slow. However, we see this move up in the Nasdaq. Why? This doesn't make sense. Why is the ES going lower, but the ES is going higher in this instance? This right here is called a divergence, another setup. So what do? You get in right here at this level, at this previous level A of liquidity, large orders, and the previous level of support. You get in here. And then the market is most likely going to shoot down. Guys, these setups are so obvious once you know how to read the markets. You don't need to trade 24/7. In and out, 15, 20 minutes a day, it's all you need. And if you make $1,000, $2,000 a day trading, guys, that is more than enough for you to become a very happy entrepreneur. If you want to learn how we do this and how you can do the same, Click the link in the comments or in the description down below. Apply. I have 10 spots every single month for new entrepreneurs, teaching you exactly what I'm doing, how this works. I teach you everything, how this works. This is so freaking obvious all the time. You can do this as well. So click the link down below. I'm going to teach you all of my concepts to do the exact same. Okay? It doesn't take a whole lot of time to learn this. It doesn't. You can learn my concepts in about, I'd say, 2 weeks, because they're simple. It's not rocket science. It's not. Learn my concepts, use them in the markets, get multiple prop trading firm accounts, make money, small money, tiny money in every single one of these accounts. $100 a day in every single account. But if you have 10 or 20 of these accounts, guys, that's more than enough for you to actually profit from the markets and become a very, very happy person. A very, very happy person. All right? That's all you need. It is not rocket science. You can learn this, you can do this, and you will live with so much more freedom. And look exactly what I just told you. The ES is going down with pretty good auction quality, right? I told you this move up was not of any substance. Get in here somewhere. And then you obviously want to see, well, how is the market reacting here? But get short. You see this market is not correlating. Something is wrong. This market is going down, yet this market is going up. This is not right. This move right here is not of any substance. We will see a reversal in the Nasdaq very soon. We will see this. So guys, this is just as beautiful as it gets. I love doing this. I love helping entrepreneurs do this next to running their business because it's so freaking cool to do. I love it. Guys, click the link in the description down below. I really want to work with you. 10 spots every single month. You get really a one-on-one consulting with me. I teach you everything that you need to know. Guys, I will review all of your trades. Send them to me. I will show you, why your trades were most likely a good idea, why they were a bad idea, where you messed up, where you did everything right, and how you can improve on everything. This is so freaking simple. You just need to understand the logic of the market, because once you understand the logic of the market, exactly what I just told you guys, that this move is not of any substance. Look at this. I predicted this, guys. I told you right here that this move is not of any substance. I told you that. We went a bit further up to this level of liquidity here, and now we're shooting down. Why? Because the leading market, the ES, is going down with good auction quality to this level of liquidity down here. And the correlating market did the exact opposite. That's called a divergence. A divergence, guys. A picture perfect trade. Get in here. 48s, 49s, 50s, somewhere here. I call it at the 48s. Get in here, get out, somewhere here right now. Get out. Boom. That's all you need. 20 ticks. One account, one contract only, 20 ticks. You know what that is? That's $100. $100 per account. But if you have 10 accounts, that's $1,000 in pure profit that you can get into your bank account right away. No need to reinvest that money into your business or whatever. No. That's pure profit that you can take and just use it to fund your lifestyle, to fund your life. Go shopping with your wife, with your girlfriend, whatever it is. Take a nice vacation. I don't care. Do whatever you want with this money, because this right here is spending money. High predictability trades. About 75% win rate, 1-to-1 risk to reward ratios. I don't care about big market moves. I really couldn't care less. I care about small predictable moves in the markets, because those pay my bills. Trades like these, I call these all day long. And you only need one trade every single day. It's all you need, because these are so freaking predictable. Guys, click the link in the description down below. I really, I can just recommend it to you, because trading changed my life and it can change yours as well. So click the link down below. Apply now to the mentorship program. It's called the Unfair Advantage, because this right here is an unfair advantage. It is. And this is all you need. So talk to you soon. I wish you a great day. Some great trades if you're already trading. and I'll see you in the next video. Bye bye.